No, I think that the digital asset economy is exploding, and the winning digital currency is the tokenized dollar in the form of Tether and Circle. And that entire asset class has exploded to about $250 billion. I mean, so if people want a circulating medium of exchange on crypto rails, they're using stable coins in the form of tokenized dollars. Bitcoin has emerged as digital capital. What you want is a commodity that's also scarce and decentralized as a long-term capital asset. So the killer application of Bitcoin is digital credit issued against digital capital, whereas the killer application for medium of exchange is a digital currency in the form of a stable coin. I think the crypto industry understands this. And I think the people of the world understand it. If you talk to anybody and ask them how they're going to pay for their cup of coffee, they're going to send a stable coin from their mobile phone app. And if you ask them, what do you give to your granddaughter, they're going to say, give them a Bitcoin.
It's interesting, if you take a look at the past few months, MicroStrategy or strategy shares have actually been underperforming Bitcoin. That has taken your premium down to about 1.4 times. And I would love to hear your perspective on why that dynamic exists. Is it something about the market? Is it the fact that you have all these digital asset treasury companies coming to the fore? Or is it something else?
You know, the market's still working to digest a new business model. The Bitcoin Treasury Company is an idea that's only come to the forefront in the past year or so. For 300 years or so, the world revolved around gold-backed credit instruments. People issued bonds and credit based on gold. We've discovered the killer app in the Bitcoin world is Bitcoin-backed credit. I'll call it digital credit. You know, in the 20th century, we had bank credit, we had mortgage credit, we've got commercial corporate credit, you've got sovereign credit. Well, digital credit is a new creature, and Bitcoin treasury companies exist to issue digital credit. So the reason there's a premium in the equity is because we can create digital credit instruments. If we were just an ETF, we wouldn't be able to create credit instruments. Mm-hmm. The credit itself is an extraordinary new asset class.
Coming down. I think it was closer to 2 a couple of months ago. Is that something that concerns you as you look at these different types of financing vehicles that you have?
No, I'm not really concerned. What happens is the premium will expand as our leverage increases and as the volatility in Bitcoin increases. When the volatility falls and our leverage falls, sometimes the premium contracts. But the real key here is the digital credit we're issuing, like Stretch. That represents us stripping away the volatility and the risk from a commodity, from Bitcoin, the digital capital instrument, and then distilling out a particular currency, USD, a particular yield, say 10% on Stretch, and then a certain duration for that yield. And we offer those to the credit market. So we don't really need a premium to issue digital credit. Our business model works fine whether or not the equity trades at a premium or a discount to the underlying Bitcoin. The equity will have value because people understand the value of the credit instruments. And we've launched 4 credit instruments this year, 4 billion-dollar product lines, and the year's not even over yet. So that's a lot for the world to digest, since they didn't see a new class of credit for 100 years before us.
Can you respond to some of the concerns out there, if not just direct criticism, about the potential sales of any of your holdings and what that could do to the market?
We're so way over collateralized, it's hardly a concern. I think we've got $74 billion of Bitcoin. We've got $6 billion of these preferred credit instruments outstanding right now. They don't even come due. I think it takes 1 or 2% of our annual equity issuance to cover our dividends. So not a big concern.
We know, Democrats know, they are doing the wrong thing by shutting the government down. You can see it when they're answering questions. You can hear it in their voice. There is zero good reason for them to vote to shut the government down right now. They are doing it for political reasons. They are doing it because they want to give taxpayer-funded healthcare benefits to illegal aliens, which is something the American people resoundingly rejected ahead of the election last year. That's why they reelected President Trump in a large part. And so Democrats know what the right thing to do is, and it's to reopen the government. It's likely going to be in the thousands. It's a very good question, and that's something that the Office of Management and Budget and the entire team at the White House here, again, is unfortunately having to work on today. These discussions and these conversations, these meetings would not be happening if the Democrats had voted to keep the government. We're going to look at agencies that don't align with the administration's values, that we feel are a waste of the taxpayer dollar. And look, unfortunately, these conversations are happening because we don't have any money coming into the federal government right now. And so the president wants to be a good steward of the American taxpayer dollar during a time when our balance sheet is looking very grim because the Democrats chose to shut the government down.
Russ has to sit down and decide, because he's in charge of that office, which policies, personnel, and which programs are essential and which are not. When he sits down as the director of OMB, he will obviously have a subjective determination on the priorities. And what do you think he would do? Because what would any OMB director do under any president? They're going to look to see for the administration's priorities first and ensure that those are funded. You can think of this as something like business interruption payments for the American workers. We're looking at sending checks to Americans immediately. Americans need cash now, and the president wants to get cash now. And I mean now in the next 2 weeks.
How much?
I will be previewing that with the Republicans. There's some numbers out there. They may be a little bit bigger than what's in the press.
Go ahead.
Welcome to the Cryptoteacher. Don't forget to like and subscribe to the channel. And you know I come back with that video just to make you think. And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. Also, go like and follow the TikTok. More videos to come. And we have Michael Saylor speaking for the banks. Says that the winning digital currency is stablecoins. Yes, you heard that correct. And we know for a fact the Fed is not giving up that control, so he's exactly right. Because we could easily be transacting with crypto to crypto, but guess what? The stable coins are the middleman, and we know that's the Fed. And remember, the Cryptoteacher told you. And eventually NAV will flip. We know this is not going to end well, but of course, this is a plan. It moves in phases. Because as fiat liquidity shrinks due to the adoption of these stablecoins, fiat days are numbered. But again, it's a plan. It moves in phases. And will Michael Saylor sell? And the answer is eventually, yes, strategy is definitely going to sell. Because the Fed is eventually going to get that Fed funds rate down to 2%. And remember, the Cryptoteacher told you. And then we have the government shutdown. And we know it's going to create more layoffs. But again, that's part of the plan. And it feels like we're back to 2020. And that free money was passed out. And in the next couple years, that free money is going to be passed out again. And remember, the Cryptoteacher told you. There's going to be universal basic income. Remember, the C word was just a test for what we're about to go into. And that's the fourth industrial revolution. And we have holiday hiring is down. And guys, we know that's due to the corporations going to AI and automation. But the small and medium-sized businesses are closing left and right. Where I live at, there is constant, and I mean constant closures. The only thing that's opening up right now are restaurants. And we know they don't last anyway. But all the stores that were here when I was a kid, they are all gone now. And remember, the Cryptoteacher tells you. Now, the last shutdown was 2018 going into 2019. It was for about 35 days. But, guys, we were in the fourth quarter. Everybody's saying, oh, this shutdown is not going to affect. We was in the fourth quarter. And we know the fourth quarter is normally great for stocks. Consumers are out shopping. But guess what? The consumer is already living paycheck to paycheck. And with this inflation, having 1.3 million people out is not going to help. We know the consumer is already hurting. We can look at the credit card numbers on the Fed website. They're not confusing us. But the fact is the stock market is not real. It's just ran by an algorithm. That's why the same companies are getting all the money. And what do I teach you? Follow the money. But guys, you're living an illusion. And the longer this government stays shut, it's going to have a big impact on the economy down the road. Guys, we've seen this movie before, but all we have to do is follow the Fed and the bond market to let us know whether we're going to have an unusual pump, because we keep hearing all these numbers, great numbers for the stocks, great number for cryptos. We know who to focus on, the Fed and the bond market. And remember, the crypto teacher told you. And Apple turns to smart glasses, and that doesn't surprise us. We know these smart glasses are going to replace phones, and then, of course, it's going to be a hologram that'll be attached to your glasses or your watch. And remember, the crypto teacher told you. And we have Taiwan rejects chip plan, and we know Taiwan is a key piece to this fourth industrial revolution. We have Taiwan, China, India, Russia, Israel, the UK, the US, and of course, Japan, who's never talked about. Japan is just holding everything up quietly. But as soon as Japan raises rates, it's going to be a rumble across this global economy. The longer they wait, the worse it's going to be. And remember, the crypto teacher told you. But we know eventually China is going to take Taiwan. And we know Armageddon is right around the corner. Guys, make sure if you're part of the Patreon, please go through the Patreons and look at the material I've been putting in there, so therefore you can stay up to date. If you're part of the Patreons, make sure you're staying up to date because there's so many moving pieces. Now we have Fair Isaac, the FICO, now license scores directly to lenders. And of course, guys, it's all about the app. It's going to be one click and you keep it moving. This is all for these super apps and the new digital economy. You'll be able to buy a house in 2 minutes, a car in 30 seconds. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Well, the data we're getting so far suggests that it is, in the sense that companies just aren't hiring. Challenger, Gray, and Christmas, with their job cuts announcements, also announces hiring plans. And they're reporting in September that companies announced plans to add 117,313 jobs. That's down 71% from a year ago. It also suggests that they are going to hire fewer people for the holidays. It's the lowest since 2011. From January through September, hiring plans are the lowest since 2009. So right now, companies are not hiring, not firing as many people. Firings were down 25%, but the number of people who are going to get hired, very low still.
Sounds like you think this one, shutdown, could last longer than the one in 18.
Yeah, but it really doesn't matter, Carl. You go back and you look at the one in 18, and during the entire tenure of that shutdown, as I wrote about, the S&P was up 10%. So I think everybody knows this is going to get ultimately resolved. I don't think there's anybody who thinks the government's too small. And so I think people are going to go and focus on more important things to some degree, and I hate to put it like that, but they're going to focus on Q3 earnings that are about to start to get reported soon.
Apple reportedly shelving plans for an update to their Vision Pro headset in favor of releasing smart glasses in direct competition with Meta. Steve Kovac is here with the details. Hi, Steve.
Hey, Court. Yeah, this came out of a Bloomberg report yesterday saying exactly what you just said. Instead of making a new version of that Vision Pro headset, Apple now focusing those resources to creating a pair of glasses, look like the ones I'm wearing right now, and to compete directly with those popular Meta Ray-Ban glasses. Now, let's put this all into perspective, because the Vision Pro has not been the massive hit that Apple probably hoped it would be. It did not usher in this new paradigm of computing or anything like that when it was originally pitched and sold. And since then, Apple actually barely talks about the Vision Pro, at least in the events, the public events that they've held.
Why is that? Because Vice Premier Cheng Li-Cheung, Taiwan's tariff negotiator, returned from Washington and pretty much made it clear they never discussed Commerce Secretary Lutnick's 50-50 chip production split, and they also would, quote, not agree to such conditions. And this really matters because Secretary Lutnick has been threatening companies with a choice. Manufacture one chip domestically for every chip you import, or face 100% tariffs, but the math just doesn't seem to work. Why? Because raw semiconductor imports were about $45 billion last year. That's only about 1% of all U.S. imports, according to the Information Technology and Innovation Fund. The vast majority of chips, though, this is where it gets interesting, comes in the country inside finished products like iPhones, data centers, servers, laptops, cars. So enforcing this would mean that tracking every single chip in every single device and then calculating domestic content, which would offset across global supply chains across the world. Wedbush estimates that that kind of component-level tariff system could add hundreds of dollars to device costs and really create an administrative nightmare. The market reaction, though, has been muted so far for some of these names, but the stocks to watch are obvious. Texas Instruments, you can see Global Foundries up almost 2%. Intel, having the largest U.S. manufacturing footprint, would all benefit from any onshore push. We know this. We've been talking about it for years. Even TSMC Arizona fabs are also well positioned, especially with reports that they're accelerating their 2-nanometer more advanced production timelines to be more in check with what's going on in Taiwan. But Taiwan's, I call it flat rejection.
Shares of FICO score provider Fair Isaac are surging while credit bureaus are seeing some pressure pretty much across the board. Diana Olick's here with more on what's driving the move. Morning, Diana.
Good morning, Carl. Yeah, FICO, which is the credit score that decides if you and I qualify for mortgages and at what interest rate, is now licensing its scores directly to lenders instead of going through the credit bureaus like TransUnion, Equifax, and Experian. And those bureaus are the middlemen, and they charge more for the scores. That is why their stocks are all taking a big hit today. The stock of Fair Isaac, of course, is way up today. FICO scores are used by 90% of lenders.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Crypto Teacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2.